We have a big week of US data coming up, guys. Should be very exciting because all this data should present a lot of opportunity to maybe make the most of some dollar related volatility. So guys, what have we got coming up? First up on Tuesday, US consumer confidence for March. Obviously guys, March, that was the first month in which coronavirus fears in the US really began picking up. Towards the start of the month, the fears started to pick up. Towards the second half of the month, people were under lockdown. Loads of people losing their jobs, businesses having to shut down, people having to stay in. All of these things are very bad for consumer confidence, so we're expecting quite a big hit. Moving on to Wednesday, what do we have? The main two things. First of all, ISM Manufacturing PMI data. It's basically the sentiment survey of businesses in the manufacturing sector. Just like consumer sentiment has been hit by all this coronavirus affair, we're expecting sentiment in the manufacturing sector to also be battered as well. Also on Wednesday, ADP National Employment data. Guys, this week is an important week for US job data full stop, because we have ADP on Wednesday, then we have initial jobless claims on Thursday, then we have the official March employment data on Friday. ADP comes first. That helps set expectations for NFP on Friday. On Thursday, like I said, we have initial jobless claims data. Remember, last week, that spiked by more than 3 million. And most analysts in the market expect it to spike by, another 3 million this week. And then obviously on Friday, the big data point, NFP, official jobs data. We're gonna see how many jobs were, well, probably lost in March because of coronavirus, what the unemployment rate is, and how average hourly earnings have evolved in the last month. It's probably gonna be lower, guys, if people are losing jobs. Also on Friday though, it's not just about NFP, we also get ISM non-manufacturing PMI. So this is the survey of the sentiment of all the businesses in the services sector. Obviously, services sector is expected to be even more hard hit than the manufacturing sector, because services sector encompasses things like tourism, restaurants and bars and all that kind of stuff, which is just completely stopped because of coronavirus. Guys, dollar is going to be moving a lot on this data, because the worse this data is, the more likely the Fed are going to have to step in and do even more dovish policy, which would hit the dollar even more. So the worse this data is, likely the worse the hit to the dollar is going to be. But let's see how it goes, guys. It's going to be very exciting. We're going to be covering it at Freak Network. Check us out our memberships, and that is all from me for now.